Good morning, traders. It's Thursday, April 26th. Taking a look at the charts. Yesterday, we had a pretty good drop in the markets in the morning. Sold down to hit some multi-week lows. Ended up recovering on the session and closing up near the highs of the day in overnight trading and pre-market. Today, we are seeing equities continue to move up with the SP500 up 1/3%. Nasdaq is up quite a bit more at 3/4%. Everything's kind of bouncing up to the 5-day moving average. You can see here for the NASDAQ, more or less, we've got a little bow tie here, a little crisscross of the 5-day and the 20-day. So it's going to act probably a little bit as resistance, but overall, the type of price action on these on the yesterday's candle is usually a sign that the market is trying to put in a bottom. It means it's sold down and buyers stepped right back up to close it for a strong reversal. And we're getting some of that follow through today. We'll see if we can break through the 5 and the 20-day moving averages and get some more upward momentum. Yesterday we did see, if we just go over, let's go to the SP500 here. If we go and zoom back on the chart here, our analysis chart, yesterday morning we did end up seeing some panic selling in the market. We saw the VIX jump up and the market sold down and had some pretty good selling in the morning. Looks like the cycle analysis pointing for today more or less is to the upside. Stocks are going to gap higher today, and big gap to the upside potentially here for the markets, and gaps tend to get filled. So whether it sells back down after the gap and fills, or potentially going forward here sells back down in a few sessions to fill that gap. We'll have to see how that unfolds, but more or less looks like the market has put in a little bit of a bottoming formation here, and we're finally got the first pop and breakout. But again, it's going to create a gap, and gaps tend to get filled. So whether it fills today or next week, that will be the question going forward. Taking a look over at some different plays here. Look at the Bitcoin. Big drop yesterday, a gap lower, sold, washed way down, ended up recovering fairly decent on the session to hold above the 5-day moving average, or right at it. Overall, we kind of had the market having an upward bias here. We're looking for some type of consolidation. At this point, it continues to just be one of these plays right here where the market kind of has an oversold bounce, and that's kind of where we're at. It could very easily fade back down. More or less, it's kind of right here where it's at its first big drop, and it could continue to consolidate. But I do feel as though Bitcoin is going to build a base going forward and give an opportunity to get long for another potential run up in price. It has had these huge, massive run ups repeatedly over and over again. The only real difference with this most recent one that we saw in December was this time I saw and heard Bitcoin on TV to buy Bitcoin, radio ads, family, friends, relatives, everyone just wanting to buy Bitcoin. And that's usually the sign that it's euphoria in a market top, whether this is the actual top for Bitcoin or if we're going to continue to go and have another wave higher. Very tough to tell, but at this point it's fading down, it's trying to build a base, and it has had these huge rallies repeatedly over and over again with same percentage type gains each time. It goes up hundreds and hundreds of percent and then sells back and crashes down and then goes up hundreds of percent. Again, if we zoom back in time, it's done these patterns. They get tiny, but really they're the same patterns over and over again, these spikes that just happen over and over. So that's where we stand in the grand scheme of things for Bitcoin. We are somewhere in this kind of area right here for Bitcoin. This is kind of that type of formation where it's going to take some digesting before it potentially starts to maybe ramp up for another huge rally going forward. Taking a look over at, let's move over to the dollar real quick. Dollar again up yesterday, continues to push higher. More or less, we're getting up into a pretty significant area here where there's this hiccup in price, and then also it's where price kind of let go and we saw the dollar really collapse. So we're starting to get into more or less fill this gap that's here into this key resistance area and this breakdown zone. So I think we could be starting to get to a point here where the dollar could fizzle back out and roll over. Of course, a strong pop in the dollar has put downward pressure on precious metals. And if we take a look at gold and silver and miners, all the same thing. They've kind of been moving down the last few sessions to the lower end of their range, but they're all still holding up within their bullish patterns at this point. And if the dollar does break down, we're going to see, I think, them recover very quickly back up to the highs and potentially new multi-year highs. Looking over at energies, natural gas forming what looks to be a little bit of a basing formation. It has had rising volume on buying days. The selling days, we've seen volume kind of dissipate, or there's been very few selling days. And the price action here is starting to look pretty bullish for a pop and a rally. Thursday, we have inventory numbers for natural gas. Usually creates some type of hiccup in the price, so I wouldn't be surprised around 10 o'clock today if we see some type of spike in price, whether it's up or down. We never really know with inventories, and natural gas moves in a blink of an eye, so it's a little tougher of a trade simply because of the inventories numbers and how quickly natural gas can react to those. Looking over at crude oil, up 0.8%. Let's just zoom in a little bit here. Continuing to consolidate. The longer something consolidates, usually the more power it has. Overall, a little overextended from the 20-day. Love to see it come back down and consolidate, and potentially consolidate in a much larger formation. If we go to the weekly chart, let's just take a look at the weekly formation. You can see it's popped up, a big up day, smaller bar, another smaller bar, acting as though it's kind of running out of some upward momentum. So ideally, would like to see it kind of consolidate for a bit. But again, in the grand scheme of things, it has broken out of a basing formation above this 62. It oscillated around this 62 for a while and then really took off in the last 3 weeks to the upside with more or less 74, 75 target being the next upside move somewhere up in this area going forward. But again, this could take, we could see a consolidation from here, which we'd like to see to get potentially in place. And then it could take several weeks for it to run up that distance still from at this point forward. Taking a quick look over at the VIX, down a little bit today. Let me go to the daily chart. The VIX, it's hard to see because it moves so much, but more or less the VIX the last 2 days had spiked up 10% roughly. Yesterday spiked up again, ended up closing back down. It has kind of popped up into these lows. Looks like it's likely headed lower, which is what we want. As the VIX fades down, that means equities are going higher, and it's good for our long position in the XLF at this point. We're looking for some new potential entry points or to add to any of our current positions as the market kind of corrects here and sets up new moves. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.